We're bringing in right now, though, Don Bilson. He's head of events-driven research at Gordon Haskett. Earlier this year, Don's unconventional research helped him figure out that Berkshire Hathaway's inclusion was going to be part of the Occidental Anadarko deal before anyone else. Also, Frank Louthan, who is telecom analyst at Raymond James. And Don, let's start with you. You say that this was the perfect time for an activist investor to jump in.
Absolutely. I mean, it's been a lousy stock for, basically Randall Stephenson's entire tenure. It looks very much like he'll be leaving the company sometime next year. I mean, next year will be his 13th year of being CEO. That's generally kind of your life expectancy. They are going through sort of the succession process as we speak. This would be the time to jump in and shape policy.
That's what I mean. I wonder how much of this was... AT&T said themselves that many of the things that they're being pushed or asked to do by Elliott, they're already in the process of doing. They've already kind of taken this on, and maybe it's the perfect time because the stock has started to pick up. The company is at an inflection point. It's finally able to kind of get on the ground with Time Warner and bring down some of the debt. It seems like it's been on track with many of those issues.
Absolutely. But, that's what every activist wants, is a little bit of a tailwind behind you.
The activist wants the work to have already been done so they can jump in and then claim credit?
They want a little of that, and they certainly don't want to be fighting headwinds. So if the model is turning a little bit and you have an opportunity to affect management and to put some of your own people on the board, this is the time to do it.
Frank, you actually upgraded the stock earlier this year. Why'd you do that? What do you see happening?
Well, our thesis then was fairly simple. The stock was beaten down, and we felt there were more things that could go right than with some of its peers, and so it could see some appreciation. And one of the things that we thought was really going to help was the delevering. And so a big part of what Elliott's saying is selling off assets. They're already doing that. They've got $500 billion of assets. They're selling about 2% of them. I think they're going to continue to do that for the next several years and just get some of this stuff off the books. Now, it may not be the big ticket items that Elliott is asking for, but they're definitely looking to do that. And as far as some of the things they want them to sell, it's not as simple as it seems. These are complex businesses, and you do have a lot of benefit from having these assets across the different platforms. Data generation, for one, is really important to generate, both for content creation and then also to be able to monetize that with advertising over time. And it's just going to take some time. And the Elliott cites the Time Warner acquisition. They really haven't had that asset to look at until they finally got through with the Justice Department issues earlier this year. So I think you'll get to see some more details. And I do think you're right. Elliott's jumping in with a tailwind, but they've already taken on some of these things. We also think that they're going to use buybacks going forward, and that'll get a lot of investor attention. And all of these things help the share price.
Hey, Don, one of the things when Leslie was giving her report, it kind of caught me off guard that she called AT&T a media conglomerate. And it's true, but we've always called this a telecom company. The company has changed drastically. In terms of what you think they should be holding on to and what they should be changing, what's the right path forward? Do they need to be bigger as all of these other companies? I think of Comcast and a lot of others that have gotten bigger, thinking scale is the way to win. Is that still the case?
Well, I mean, I thought the Time Warner deal didn't make a lot of sense. It's too late to unwind it all. I think they should let go of Turner. I mean, if they can get a multiple for what you paid for Turner or above that, that would be a good opportunity to pay down debt with that. At its heart is a wireless company. It is a telecom. And Randall has come up with this concoction to turn it into something else, and the stock hasn't responded. And that's where we are today.
Oftentimes with these big moves, I mean, Elliott's putting $3.2 billion of capital to work in this thing. They get support from other investors. Have you gotten the sense that Elliott does have support from other big investors that are already in the AT&T stock for its support? For its proposals? Well,
that's the thing. It is so underowned. People don't have big, meaty stakes in AT&T. I mean, it's largely owned by retirees and workers. I mean, that's where you have 550,000 retirees. You've got 250,000 workers. That's a big part of the stock. It's like very similar to Procter & Gamble when Nelson Peltz went after that. So the votes get tough to handicap here.
There's not.
I would somewhat disagree with that. I mean, a lot of investors we've talked to have been shifting into AT&T, and we've seen that as the stock's lifted, it was clearly undervalued earlier this year. And I think the Elliott will get some more attention. But what they really have to do is get some of the big, large global fund managers behind them, and with a position that we're not exactly sure how much of it is actual stock ownership versus synthetic. Remains to be seen how that will play out. But I do think you've seen more of an institutional shift into the name, and there is still a pretty sizable ownership from that community.
Frank, aside from deciding what assets get sold and how much of the asset base gets sold, it seems like a capital allocation question strategically, right? So it's allocating. You mentioned buybacks. Elliott seems to not want any more additional M&A, and then dividends. So how do you think the company is now thinking about spreading its capital across those things in terms of shareholder return and new investment? How might that change?
Yeah, I think the shareholder returns are a pretty important focus. I mean, they've made a commitment to paying down the debt. That will make a lot of the bondholders happier to have less outstanding. And once they cross that 2.5 times threshold, which we think is fairly achievable by the end of the year, sometime within there, they can start doing the buybacks as well. The company has bought back stock in the past. I think shrinking that equity base is part of what the story that Elliott is discussing. And the company has raised the dividend for the entire time it's been a public company. I would expect that to continue to be the case. They usually do that towards the end of the year. I don't see any reason from our model. I don't see a reason why they couldn't continue to increase the dividend. And that's a pretty important part of the story. When you look out there for investment with yield, it's very difficult to find. You can't really get in treasuries. And so I think a stock like this that yield investors can count on it's going to continue to be a very attractive part of the story. So I think they're going to be shoring that up.
You know, the yield, 5.5%. I mean, that's a crazy yield when you look across what's been happening. Some people thought that it couldn't continue like that. Obviously, the stock price going up changes that a little bit. Their dividend, I think, has gone up about 1 penny a year. You think their dividend will increase beyond that rate?
It's been up about 2% a year, so give or take. I think that's probably the range that you're looking at. I'm not looking for a massive increase, but I definitely would expect the board would continue to increase it this year and going forward. I don't see why they couldn't.